Hi, everybody. It's Dennis, the active trend trader. Are you one of the traders who has a difficult time finding great growth stocks to trade every weekend? Well, we've got the answer. Welcome to How to Make Money Trading Stocks and Options. We're going to cover three things. Our panel of expert traders has picked out three top shelf growth stocks that are setting up and ready potentially to trade next week. Number two, an analysis of the indexes showing which ones are strongest, which ones are weakest, and what the potential is for a move next week. And then we'll also cover another trading problem or issue that you may be having, and we'll provide an answer to that will help you, one, maximize your profits and minimize your losses. So let's get into today's session, right? Okay, hello everybody. This is Dennis Wilburn, the active trend trader. Welcome to How to Make Money Trading Stocks and Options. We've got three great stocks, but you're going to have to wait to the end first to go over them. I want to welcome both Anil and Steve, our two elite stock pickers. Gentlemen, how are you doing today?
Doing great.
Pretty well, thank you.
You know, I got to thinking before we jumped on to today's Zoom meeting is that I think all three of us have in the past been, or still in the currently have been teachers, instructors, professors. I know, Steve, you're a professor there at University of Hawaii, right?
Retired now, yes.
Retired now. But Anil, you also do some teaching, right?
Yeah, I'm currently teaching at the University of Delaware, lifelong learning.
And then I did. I was an adjunct professor at Chaminade University in their MBA program back in the day, and so I find it very interesting that the three of us have come together to continue teaching, but just teaching something that we're all passionate about. So.
Right.
Anyway, welcome everybody. Let's go ahead and jump into today's session. We've got a lot of stuff to cover. We've got some three great stocks to look at, and I also have asked a question of both Steve and Anil that we will cover. And so just I want to remind you that if you want to maximize your profits, minimize your losses, if you want to take a look at the Autopilot trading system or service, it is based on the active trend trading proven, clear, and simple system, which focuses on helping you trade your way to one, wealth and financial freedom. My goal, 40% per year ROI with a 65% win-loss ratio. And today, though, we're going to focus just very simply on the market and a review of the market, then our stock picks. And then I'm going to, matter of fact, before I get into the market review, I'm going to go ahead and ask the question of Steve and Anil right now. You know, we put out these great stock picks every week, and you tell where you're going to get in. What are your simplistic or your simple rules? It doesn't have to be very verbose, but what are your simple rules for getting out of a trade? Getting out of a trade, both because what I find is that oftentimes traders, they get really good at getting into something, but they become like a deer in the headlight when it's time to get out. So, yeah. Steve, what's your rules to get out?
It's pretty simple, and actually, I got them initially from you, but I got it wrong, but it turned out to be right. I use the ADMA as an exit, my basic exit. I say 90% of the time, 90% plus. On a close below the 8 EMA, I exit. Your view on that was the 8 EMA on a weekly chart. I misunderstood that and applied it to a daily chart. And actually, I like it as an exit. It's not an indication that trend has changed definitively. It's not a definitive indication. But if trend, I'm a trend trader and I'm trying to trade with trend. If trend is going to change, we must first give up the ADMA.
Right.
But that alone is not an indication of a trend change. But I use that as kind of an early signal to exit. I exit, then I see what happens. And if it doesn't break down, I get back in. If it breaks down, I'm glad I'm out there.
Okay.
That way
cool.
I get most of the move, but I don't get it entirely.
Okay. And then what about when you first enter the trade? What's your max stop loss?
There's no percentage. I use a technical point on the chart. Usually it's the low of the entry bar. Sometimes it's a little bit lower.
Yeah, I really like, and the thing that I like about that is I've adopted or adapted a little bit of what you're doing there with the low of the day you enter, because that, in reality, if a new trend is to be taken off and going up, that the low of that day, especially if it's a new high day, that should not be violated for the trend to continue. So what about you, Anil?
My exit basically is 5 to 7% stop loss.
Okay.
That's to protect the capital. And as far as taking profits, about 99% of my entries are based on my triple screen system, which means the ATMA has just crossed 20.
Okay.
MACD has gone positive. RSI is positive. And so my exit is also when 8 EMA crosses 20. And I might wait for at least I get out at that point about half my position.
Okay.
And then depending on where MACD is, I may stay in or longer.
Okay.
That's in a nutshell.
Yeah. So cool. Now, mine is basically it's been refined over the years. I still utilize and observe the 8 EMA that Steve's talking about. I look at it both on a daily and a weekly chart. They represent two different things. The 8 EMA on a weekly chart is corresponds approximately to the 50-day moving average. And so you can utilize that, and it's always a good thing if you get below the 50-day moving average. It's time to get the heck out of Dodge. And then the second part, but what I've been doing here lately is I've been basically looking at either a stop when I first enter a trade. That's when we're taking off from the runway. That's the most dangerous time that I find for most trading. And so I'm looking at either a stop loss about a nickel to a dime below the most recent swing low, or that, as Steve was talking about, the low of the high day. Not much. I'm going to keep it really tight with a max downside loss of somewhere between 5 to 7%. I want to trigger out on part of my position. And that's the other thing that I think that I learned as I became a better trader, is that it's okay to exit part of the position. It's not an all or nothing thing. So what I've learned over the recent past is how to pyramid in and then pyramid out. And how do I pyramid out now? Basically, I have 3 different levels. I pyramid out at a 10% gain, I'm out off of third of position. If I hit 25%, I'm off of another third. And then what I'll do, and it's been working very nicely, is I'll throw in then a trailing stop of either 7% when I'm up 10%, or I will, if I get up 25%, I make my trailing stop 12.5% and just let it go and let it run. And what it does for me, and now I do take a look at my candlesticks on a daily basis just to make sure that nothing's getting freaky on us. But basically, I can sleep at night knowing that, if I'm up 25%, the worst I'm going to do is make 12.5% on that trade, which is, hey, that's excellent. If I get up 50%, the worst I'm going to do is, 37.5%. So that's my kind of exit techniques, guys. And so, cool. Thanks, guys. And I think
sounds good.
And Anil, I think it would be possibly, let's get together in the near future, Anil and Steve, and just kind of put together, okay, what could we do as a 3 traders to be able to share with other people? Guys, if you would be interested in hearing that, if you are being invited to and we'll just make it free, a Zoom meeting that Steve, Anil, and myself talk about different aspects. Or if you have questions that you could send to me, how to address, trading aspects, and I may invite some of you guys to join in the panel. That would be absolutely awesome. Send me so what do you think about that as an idea? Please leave a comment down in the YouTube channel, down in the comment section, and just lay a comment on me for the chat box here. So just remember, the materials which are provide are for training purposes. Traders should always pay for trade any new method prior to the risk of their own personal capital, of course. Past performance is not an indication or a promise of future performance. Let's take a look at where we're sitting. Last week, we were sitting up about 22.6%. The market had pulled back just slightly. It is basically doing a rebound right now. And also active trend trading, I'm up 23.8% for the year. And I want to give a shout out to Eric Gallup. He basically helped me readjust my position sizing. And so one of the reasons why I'm up more now than I was at the beginning of the year is because I readjusted my position sizing, where I was taking on more full positions and therefore more profit. So that worked out really well. So that's where we're sitting. Let's get over and take a look at the, I'm going to run through the charts really quickly. There we go. Let's start out with the S&P, or the spiders in this case. What we saw with the spiders is we didn't really get a really great reversal signal here. Here's Monday's position, right, or Monday's candlestick right there. Give it to you right there. We came down. These two lines here are levels of past support and or breakout areas. So we knew we had a zone of support that was down in that area there. Didn't quite get there all the way to the bottom, and that's okay. And we did a rebound. And where did we rebound to? Well, let me get rid of that. There, wrong one. Well, we rebounded basically back up to the downtrend line. When you get that kind of a move, let's get rid of that. As you can see, we rebounded back to the downtrend line. We went above it, and so I call this a Pinocchio move, where Pinocchio's nose grows up and then drops back down. And because what it's doing is the breakout failed, and now we're just sitting right on top of the line. You could consider Thursday's move a shooting star. The only reason I don't consider it a shooting star is because it's not at the top of an uptrend. Yes, you had a one-day spike up, but a one-day move up does not an uptrend make. And so now we're getting basically a candlestick, another indecisive candlestick right at a level of resistance. The only thing that it's doing is it held the halfway point on the gap up, and that is a strong level of support. I don't really have a let's buy this right, let's buy it right here. At the same time, though, if this fails and it closes the gap and falls back below in this case, this is the 100-day moving average, we're probably going to go back and revisit here. This line down here is the 100% extension of this move from here to here. If we reach that line, I would like to see us put in a 10% correction. However, and that would put us down to about 7.5. Hitting down at it's going to be below a 10% correction would take us down to about 410. And as you can see, if you look to your left, 410 is just slightly above a breakout area. Now, why do I say that? Is that basically to be categorized in as a correction that it's achieved its corrective amount, it has to drop 10%. Right now, ain't happening. So S&P looks, it's I won't say it's a strong index, but it's certainly a lot better than the Qs. There we go. The Qs failing, came right up into the moving averages and then reversed. So that is a stalling type technique that could in fact drop, considerably down. And a 10% retracement on the NASDAQ would take us down to approximately, I had done this earlier, I think it takes us down to about, there we go, right about the 200-day moving average. And so I would like to see this pull back down towards Monday's lows. And what I would anticipate happening, that may then give us a really strong buy signal in that we would have a positive divergence, potential positive divergence on our TSI and a positive divergence on our market forecast. And then with the positive divergence and a reversal candle, that may give us our spring into a longer trade going into the end of the year. And so that's what I like about the Qs or the NASDAQ. IWM. IWM is still working in its little channel. We basically started, let's see, that was Monday. Again, not as big a sell-off. Wednesday was a kind of a down day for Russell IWM, but then it rebounded really fast. Now we have not broken out to move higher. However, it does look positive from the aspect of we are getting a series of higher lows. We need to take out that high right there to be back in gear for another higher high. At the same time, the higher may take us right back into past support. Past resistance. The key takeaway that I would like to leave everybody with on the indexes is that each of them is providing an excellent trading range if you are quick enough to be able to get in and get out for a nice move. And so you may want to look at both the leveraged ETFs like TQQQ or SQQQ for the NASDAQ, or doing an option trade either up or to the downside. That's what I've got, guys. Steve, Anil, what's your take?
I pretty much agree with what you covered. I think we're basically at a cusp. The market can go either way. I can see bullish or bearish scenarios. I believe in the work I do that this market is carving out a bottom and it's ready to move higher, but it has not yet made that very clear. And I think until we commit and close at least 2 closes above your trend line, when we do that, I'll be full out bullish. But until we do that, this market can do anything. Although I think the way I see it setting up, there's much more volume to upside waves than downside volume to downside waves. So I think the sellers are getting frustrated and they're going to give up the boat pretty soon. Yeah.
And so, Anil? You're on mute, buddy.
Anil, you're muted. You need to unmute yourself.
Is it okay now?
Yep.
Yeah, my indicators are still barely turning around here right now, so we'll see what happens. No confirmation yet.
Yeah. Okay. I would agree. Indicators by definition are lagging, so I would agree with what you're concluding. Yeah. If we've made a turn, the indicators are not likely to be showing us that right now. but maybe in a few days. Yeah.
Yeah. And I'll share this also with everybody really quick. This is the percentage of stocks on the NYSE that are above the 20-day moving average. One of the things when it hit its low earlier, one of its lows back in this area here, what I found interesting was that the percentage of stocks above the 20-day moving average did not drop below the 30 level.
Yeah.
And what does that normally tells me that, well, one, we had some divergence, but there were more stocks showing strength and without selling off. And so as we see, we have not made a lot of progress per se on the indexes, but we are pushing higher here. Yeah. And so that's kind of an interesting perspective. So let's go ahead and, so who wants to go first on the stock of your stock of the week?
Doesn't matter. You choose, Dennis.
Okay. You got to tell me
okay, that's my stock.
Okay.
It's not a trade today, but it's in a nice trend. It's pulled back to approximately it's trying to hold at the 20 period.
Right.
I like the price. It's not great price action today, but as long as the low from 5 days ago is not breached, I will be looking for an entry once I see some buying momentum coming into the stock. That could happen on Monday. It may take all week. It may not happen next week. But as long as we hold that prior low, I'll be looking for a long side entry.
Okay, you're talking about that prior low right there.
That's correct. That's correct.
Okay. And that has held, again, look to your left.
Mm-hmm.
And that has been, that line right there has served both as a line of support and a line of resistance. And so
I consider that a breakout area, and then we've just pulled back to it.
Okay. And this particular entity, it does have weekly options.
Weekly options, right.
So that, I like it. And so it's got earnings coming up when? It's got earnings coming up on.
Pretty close.
Yeah, 11/9. Now, the one thing I would keep an eyeball on is that we still have our momentum shifting down, and see what happens over here on the weekly momentum. If it holds up there and the weekly momentum actually falls a little bit, that's actually a sign of strength, as long as you don't drop that, that either the dotted line there or maybe this line right here, correct. 131 level. As long as it stays above the 50, you should be in pretty good shape. So I like it. Yeah. Anil, I like your choice, but something has to happen, for me at least, something would have to happen before I would actually buy it. So walk us through what you got going with apps.
Yeah, as I said, I'm looking at my triple screen charts.
Okay.
And it had a weekly signal earlier this week. And it has a little bit of pullback today. So I'm okay to buy right here, right now.
Okay. And your stop loss on this?
Stop loss would be about 5%.
Okay. So if you bought it right here, right now, let's see where that would take you on your stop loss. Stop loss would be kind of below yesterday's low. So yeah, that sounds like a winner because it shouldn't go there. I mean, it should not go there. That would be actually below the 8 because the 8's probably going to scoot on up here. So excellent.
But I'm all, if I may make a comment, I'm always nervous when we get into prior highs on low volume.
Yep.
It's often a place where the stock rolls over a bit. So I'd be watching that. But I like the pick, and this in the past has been very good for me.
Yeah.
It's just one of it was just off my radar a little bit in time. But I like your pick, Anil. I think it's a great stock.
Thank you.
We traded a little differently. It's all.
Crap. Now it just broke out from that
trend line.
That trend right there. So yeah, I mean, it's like I said, again, I like it. I'm a little bit of more of a pullback trader, so I'd be looking for some kind of a pullback into the 8 and 20-day moving average. And again, but nice. And this one also, Digital Turbine has weekly options. I love it for us option guys. And so, hey, Barry, did you have a question, or are you just saying hi, bud? ATMA. Oh, 8. Sorry about that. I didn't enunciate very well. So, okay, here's my pick. My pick for the day. ATKR.
Yeah, I like that.
Okay.
It was almost a pick for me.
And so ATKR. Now here's the rub though. With the market showing kind of inconsistencies in strength, I like ATKR, but I like it from the aspect of it appears as if it's starting to go into a range-bound type move. And if that in fact is the case, then I want to basically just lay in some, I'll lay in some levels here. Let's see, I'll grab that one there. That looks good. And I'll grab this one up here. There we go. And so it may go into an operation where it's be within, running between the low here at, what is that low? 88 up to the high up here, which is 97.50, 97.70. So that would give us a move of how much? About 17%.
Yeah.
So, yeah, about 16.5%, 17%. And if it oftentimes with the market, current market conditions, what you will get is some of these great top the growth stocks, they'll go into a consolidation period where they bounce within a horizontal range. And so just imagine, bounce up to here. So try to pick it up down here, somewhere between that low there at, what is that, 80? What did we say it was? The low was 83.52. So between the 83.52, so pick it up at about $84 and basically try to sell it when it gets up to about 96. And if you can do that, sometimes they'll get stuck in that range for weeks and or months, and we'll make 2 or 3 round trips. And so it's they're fairly conservative trades, and because your stop loss is just below whatever that swing low is, right, more or less right there. Yeah. So that's my pick. Now, what could happen then is when the market strengthens up, a stock like this then rocket ships out of there.
I like it. I agree. And it was almost my pick for today also.
No, it wasn't.
No, it was the one I considered.
Okay.
But what I like more also, basically you said the same thing, but to me, this is in a Wyckoff trading range. Yeah. It's at a level where the odds are pretty good. We retest the low, and then the explosive move to the upside is likely to begin there. Yeah. As long as we do not close below that low from 3 days ago. Right.
And that's why my buy, I'm not messing with this up here. This is called the meat grinder. This is where it will just, rip your face off because you'll try to jump in at the moving averages. Yeah. The moving averages, when you go into a sideways move, don't really work that well for making trades off of. You want to go to your support and your resistance. Mm-hmm. So I would be looking at, if I can get in down here, I'm really close to my stop out level. Right. And so if one could, if they wanted to, and they had a proper kind of account, you could lay in a conditional order and put it in there good for maybe 2 weeks and make sure it cancels out in 2 weeks to buy some when it gets down to, I would say this would be attractive to buy it. Let's see, probably 84.68 to 84.50. Mm-hmm. So that's what I've got going on there. Okay, that's our
good.
picks.
That's good.
Can I give you
Although
other
I would
point of
make,
view on
before
that?
I buy, I would make sure it does not take out that low. Yeah.
Oh yeah. What's Neil?
Can I give you another point of view on this one?
You
Sure.
can.
I got a sell signal on this one on October the 5th. And
Yeah, that would have been a
means-
good time to sell. Yeah.
That means it was 8 EMA crossed 20, MACD became bearish, and RSI went down.
Mhm.
Okay.
So I would be waiting for a turnaround according to my system before I would consider buying this.
Yeah.
Okay.
And I think we're saying the same thing.
Yeah.
For me, I'd be making sure we don't make a newer low, and then show of strength would get me in. Yeah.
Right. And again, and I'm saying, I wouldn't buy that right there. No,
Yeah, I would not either. Yeah.
This is not an opportunity to buy. Down here, yeah.
Yeah, it
And,
may be. Yeah.
And the way I set up my conditional orders, I set up my conditional orders to trigger as it goes down, but then it doesn't fill until it rebounds and goes up.
Okay, yeah, good. Perfect.
So, okay, folks, let's wrap her up. That's really nice. And so, hey, I just want to remind you, if you're not an autopilot trading person, you need to be. We cover, you basically get 7 autopilot trades every week, 2 in the leveraged ETFs and 5 top stocks. Here's an example of the stocks that we do. Crocs, and this is one from 912. And basically what it does, it defines what stock it is, what its accumulation distribution is, and then gives you your trade setup in the middle of the comment section there, shows you exactly the way you can put in your conditional orders. And then it also has provided a video every weekend to cover both of the pre-flight checklist. And so right now, annual pricing on this, it's well over $7,000 for the annual prices. At the same time, what we do is we want to make it affordable for everybody. So $83 a month, paid for by the year, and or you can do the 3-month payment process. So, engage your autopilot. It really helps, especially in the market conditions the way they are right now, because it's really great to be able to jump into some trades and get out. And I walk people how to protect your profits and also your capital. So, gentlemen, that's what brings us to the end of the day. Hey, trade well and prosper. Our premium members will be back at the top of the hour with the final hour. And so from our home to yours, aloha, trade well and prosper. And, start building your egg now, or continue building your egg. Mahalo. God bless everybody. Stephen and Neil, thank you so much. It was really a valid time. And I'll reach out to you guys next week. Any comments from anybody online about, coming to a video, Zoom meeting where we would basically just discuss how we both look at getting in and getting out, how the three of us look at getting in and getting out of trades. Do you think that would be valuable to you? If you do, please put a little comment there and say, yes, it would. And again, we'll put that up. Thank you, Michael. Thank you, Rick. Okay, cool. It's so funny. We're also resistant about writing something in the comments. I don't know why. I think people with a technical background just are that way. We're just kind of like, no, we're kind of like, I'm not going to say anything because my computer keys may fall off or something. So, okay.
Absolutely.
Anyway, so Steve and Neil, thank you very much, my friends, and we'll
You're
chat.
welcome. It's always
Thank
a
you.
pleasure.
Okay.
That was
Aloha.
great.
God bless everybody.